Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the forex market, in particular on euro currency. As we already mentioned that on the British pound we have approximately the same picture. So it seems that markets come down a bit after the first impact of the recent geopolitical events in Israel. So currently everybody just see what will happen, just because currently there's a lot of uncertainty around the situation. Speaking it well, shortly and keeping it simple, it depends on whether Israel will break some red lines on the total destruction of the Gaza or not. So if they will break these lines, so probably it might be some escalation, especially if some other Muslim countries will enter this confrontation, and that might be a real disaster. So that's why, well, it seems that everything it's more or less coming to some solution, but still a large degree of uncertainty still exists. And from that standpoint of what we could say about the current situation, if we'll take a look at the interest rates in 10-year, you could see what has happened. That's actual reaction. So some demand starts on safe haven assets, and it has pulled back downward the yields on the 10-year bonds. In general, if even we wouldn't have any geopolitical events, this reaction mostly comes logically after from the technical point of view. So as we said, market hits the overbought, and actually here I would suggest we have some kind of the double repo pattern actually. So you can see this market is trying to move higher, shows retracement, final attempt also has been stopped, and market collapsed. This is the nature of the double repo if you even do not have the close with the moving average, but its nature, how market behaves in this top, this is purely the double repo type of action. Maybe on a fall time frame chart, by the way, we will get the double repo. But anyway, what we have currently is that some drop in the yields, which is actually could be supportive for some retracements across the board, not only on the 10-year bonds, but on the forex market as well, and on the gold market also. From that standpoint, in general, here market keeps the short-term bullish background. If you remember, we said that maybe market could form some pullback and retracement either to nearest 106.40 area or even to 107.50, because pullback right there seems, well, probable, and in general breaks nothing based on the weekly chart. This retracement to just 107.50, near 30% pullback after significant drop right from the weekly conference support. This is normal, so nothing wrong with this. And currently our task to estimate what particular target will be reached. So currently all that we have for discussion is reversed hand shoulders pattern that we already discussed last time, and now it's been taking some shape. So first of all, we can see the pullback that we discussed in the weekly report right to the 105.25 area has happened, and market has formed a grabber. This grabber suggests taking out of this top. So if you have taken the position here yesterday, that's great. So you could just move stops to the break even and see what will happen. So because, as I said, overall background currently is not really against of possible upward action. So performance on interest rates in general more or less friendly to the retracement action. For those of you who still consider taking the long position, you could take into consideration a few moments. On the hourly chart, take a look what we have. This is the same hand and shoulders. We have two different extensions. First extension is based on the initial ABCD and non-farm payrolls report, which is the OP already has been completed, retracement after OP. If your currency will go higher and retracement will continue, next target will be around XOP, which is 106.72. That's very close to the resistance level that we have on the daily chart. Additionally, we have this larger ABCD that based on the shape of the hand and shoulders itself. And actually it shows you the same target, but this will be the OP. But anyway, this will be the same 106.70 area. So for taking the position, here 2 different ways exist. So first one, right from here, it's just because market could keep going higher. We have the grabber, we have this pullback already has happened, so I'm not excluding the chance that market just could start upward action. And maybe even some kind of the butterfly to the upside might be formed. So with some extension, so you could calculate it by yourself. So theoretically it might be. But additionally, we could consider that it might be in this manner, because when the market will show slightly deeper retracement, so it will show ABCD down, somewhere to the 105.04. This pullback also will not break yet the bullish context, because the major invalidation point here right there is 104.80, as we said. So market could form gutless triple to buy, and only after that it will turn to the upside, and its target will be slightly closer. That's 2 different ways how it could happen. That's why for position taking, you probably most simple decision is to split the position and be prepared for any action. For example, you could take some minor small position right there with the stops, I don't know, below the C point initially. If market will drop more right to the 105 area, here you could add more, some bulk of your position, 70% of your position right there. In this case, your average will be somewhere around 105.35, and so be in general great entry. Just wait for response. Most conservative approach is to wait. If indeed this will happen, you will consider whether it makes sense or not for taking position, because if you will get some kind of the collapse, you just could escape position taking at all. Just see what will happen. That's actually a few options that you have, because still this retracement even to this level will not break the overall bullish context by far. Those who would like to make the bet on particular on the 4-hour time frame chart grabber that has been formed here, well, in this case you probably should consider some position taken on some minor fib levels on retracement down of this upward swing. So here's probably 30%, maybe to consider also the 618 right from most tracing swing with the stops somewhere below these lows if you'd like to position yourself directly on the grabber patch. So you can see a few options exist. So in the current circumstances, I would choose between the either conservative approach to wait with this ABCD pullback, or most simple approach just to split the position and maybe to take some minor part of the trading lot right there and then see what will happen. So it seems that this is more or less average decision in the current situation. So that's what we have on the euro currency. So let's keep watching and see what will happen.